Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning, everyone. Thank you for joining us this morning. I hope you all had a great long weekend and you are refreshed and ready to kickstart the week. My name is Nyasha. I'm with the team at Positive Tax Solutions. This morning, I'll be talking to you about ATO audits for property investors. I will run through with you what the ATO is focusing on, the kind of documents they're asking for, and how best you can be prepared, and why it's very important that you have audit insurance. Nowadays, the ATO is not doing audits randomly. We're not counting on someone noticing that, there might be something incorrect on your tax return. They are using data matching tools, and they just focus on key areas where mistakes are common, and that's how they figure out, okay, this is who we need to audit. I will walk you through some examples that I have seen from our activity with the clients over the past couple of years, and I hope this will be very useful for you if you're a property investor. The first thing that I will start with is property ownership. The ATO is keeping a record of who owns what. We have seen an instance where the ATO has come to us and said that according to their records, this client is not the owner of the property in question. And we had to prove to the ATO that this is the rightful owner of the property and they own 100% of the property, because they want to know what you own and what percentage, what portion you own. Once they start looking at your tax return and once they start asking you to prove ownership, they also want you to prove that the income is yours, the expenses are yours, that you have to substantiate everything. In this case, the ATO asked us to provide the contract of sale to prove who the owner is, the title deeds showing percentage ownership. And on top of that, they asked us to also prove the rental income. They wanted the tenancy agreement. They wanted us to justify the rental income. How did you come up with the rental rate that you're charging? And is this rate on par with the market value for that neighborhood or that area where you have the investment property? So you have to provide an explanation, written down explanation. They also check, on websites like realestate.com.au, Airbnb, all those websites. They are using that information that is available to everyone. For short-term rentals like Airbnb, the ATO will even request, like a calendar timeline with dates that the property was generally available for rent, booking calendars showing when the property was rented out, and they want you to block out dates if you use the property privately. If you can't show all of these details, no, deductions can be reduced, or in some instances, no deductions can be claimed at all. There's also a focus on interest and loan deductions. So when they said, we don't know if your client is the rightful owner of this property, they also wanted us to prove that the interest deduction was allowable for this person. To allow for the interest deduction, they did ask us to provide all the loan statements from the inception of the loan to the end of the current financial year, which means sometimes if you don't have the loans, if from 2023, it could be an issue. You have to go back to them, so forth. So that's why it's important to keep your records safely. They did also ask that if there was any refinancing or any redraw of the loan, provide all the statements. Nothing's to be left out. And the other thing that they asked for as well was substantiation for the capital allowance deduction. This is in the form of a depreciation report. They wanted us to provide them with a quantity surveyor's report from someone who is an expert. This document should be fairly easy to provide. If you have been keeping all your documents well, if you've got a good tax accountant, you should have all these documents handy and ready to go. In this case, in this audit, this was one of our clients. We had a lot of these documents already on file, so it doesn't take us long to respond to the ATO, just provide them with all the documents they needed, and everything was okay. They didn't change anything. They allowed all the deductions, and we were happy about that. So was our client. Another case that we had where our client was audited was one where the insurance was being reviewed. In this instance, what had happened was that they're using data matching. Client had received a payout from insurance. They had claimed loss of rental income for a time where there was damage to the property and they needed to fix something. So they got the insurance, and this had been omitted in the tax return. So the ATO came back and they said, according to our records, your client possibly received something from the insurance company. What's happening? Give us the details. And in this case, what they asked us to give them was a copy of the insurance policy showing the excess paid, insurance premiums paid, and they also asked for the copy of the remittance for the insurance payout. And in some case, I think they also asked for a bank statement showing that the money had been received. And that, again, it was a pretty simple one if you have all the records on file. Because the records were easily available, we were able to quickly respond to the ATO with all the documents they requested, and no penalties were incurred. We adjusted. We did what is called a voluntary disclosure, where we say, okay, this information, this is how it should look. This is the correct amount that the taxpayer should be paying. And client was happy. We were happy with the outcome as well. So yes, that was insurance. There's a lot of data matching going on there. Another interesting area that the ATO is auditing very pedantically, is the repairs and capital works. This is a common problem area for a lot of people. I guess it gets complicated with, what is a repair, what is a capital improvement, what should be expensed, what should be depreciated. This is why it's important to have an accountant who can do the things for you correctly. We have seen an instance where somebody posted an ad for their rental property on realestate.com. And on the ad, it said the property had been newly renovated, and you know what they say on those ads. And on the client's tax return, they had claimed something as a repair to the property and expensed the full amount in the 1 year. The ATO came back and said, according to the ad that you have on realestate.com, this property is freshly renovated, which means you're doing some improvements to the property. So that expense was not allowed, and they had to claim it as a property improvement and claim it and depreciate it over time. So this just shows how important the ads are, and it also shows the ATO is watching. Keep your invoices with clear descriptions of the work that was done to the properties, how much you paid, and all the details. The last example I will give is one of capital gains tax and the main residence. We did see an instance quite recently where the ATO was questioning someone's main residence. This property had been purchased way back in 2002. And what happened in this case was this individual purchased the property in 2002 with the intention of living in it as their primary residence for forever. But the property was tenanted at the time that the individual purchased it. And it was tenanted for about 11 months before they moved in. So they purchased the property for 11 months. They were still getting rental income from the tenant, and then they moved in. So the ATO came back and said, this actually is not eligible for 100% main residence exemption because you didn't live in it the full time. There's those 11 months beforehand where you were renting it out. So you need to apportion for that time. So we had to go back digging for documents from 2002, the purchase document, the contract, the expenses, and everything so that we could do the capital gains calculation. So in this instance, the ATO just asked for the capital gains calculation, the dates when the property was purchased, proof for the time that the property was tenanted. So if you have from when you were there, when you were not there, that's what they wanted us to provide. Proof that it was your main residence. A lot of people ask, how do you prove that the home was your primary residence? And there's no clear-cut answer for that. Your intention needs to be seen by your activities. So are you getting mail there? Do your bank statements go there? Is the address on your license, is that your home address? So that's how you prove that it is actually your main residence. I will wrap up today by quickly going over audit insurance and why it matters. When the ATO decides to audit you, there is the tax penalties and possibly interest rates that they charge you, but that's not the only expense. There is also fees for professionals to help you with substantiating your claims. You've got the tax accountant's fees, which could be thousands of dollars if we're spending a lot of time in assisting with the responses to the ATO. You could also have, people who are doing evaluations or reports for you that you should use for your claim. This is all money that will be coming out of your pocket, and chances are you wouldn't have planned for this. This is why it is important to get audit shield or another type of audit insurance. And how this is useful is in such instances, the insurance will cover the fees for any professionals. It will reduce your stress during the audit. You're already stressed that the ATO might give you a huge bill. Now you don't have to worry as well about paying the accountant's fees or legal fees or whatever expenses you have. So it ensures that you have an expert assisting you, representing you without the unexpected costs. Obviously, it doesn't stop the audit, but it's painful. So that's it for me today. That's all I have to share. I hope you managed to take away something from the information I've shared. And please, if you have any questions, let us know. And I hope everyone enjoys the rest of your week. Thank you.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.